Hi everyone. Today, let's talk about the CPI report. Then we have some charts to get to. Then we'll look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So CPI came out today, and it was a bit of a nothing burger, surprisingly. It came in at expectations. The markets kind of cared, but not really, and basically went sideways, up just slightly on the day. You can see the Dow was up about 0.5%, SPY up about 1/3%, and then the NASDAQ up the most at just over 0.5%. And actually, the Russell was up about 1.5%. That was really the biggest gainer on the day. Big time moves on the Russell. See what that kind of looked like. Pretty choppy early in the session, jumped up, down quite a bit, and then kind of rallied through the mid-session. Everything that dipped pretty much got bought up throughout the session. They highlight here, this is one of the biggest moves here for the NASDAQ, gaining 4.1% over the last couple days. CPI month over month was 0.1%. Year over year was 6.5%, down quite a bit from the 7.1% previously. Core was at 0.3%, and year over year at 5.7%. So everything is moving in the right direction. As a result, stocks moved up quite a bit, and we had some Fed governors coming out and highlighting that they expect to do 0.25% in the February meeting, which is already what the Fed futures were mentioning. It's about 75% chance we get 25 basis points, and 25% we get 50 basis points. Also worth highlighting here, upon some further research, about 1/3 of the inflation was attributed to housing costs, which is a pretty big lagging indicator, and I expect that to come down pretty significantly over the next couple months. That lags about 6%, and new rent leases are down quite a bit, and that should really impact the inflation numbers going into the next several months. Moving over to the SPY on the 4-hour and the daily charts here, basically we're at resistance. You can see that line that we've been respecting for several months at this point, basically throughout the previous year. And you can see we're right there again. We did not quite fill that gap. We didn't get up to that 400 number like you would expect before you get the significant downturn. So basically, I'm waiting for one more solid push, take out all the stops right up to that 399 to 400 level. We still have bullish momentum here on the daily chart, still trending to the upside on RSI, not overbought conditions here. RSI not showing divergence quite yet. We are at higher prices here, still looks good. RSI is at the same level, almost overbought conditions on the 4-hour. Everything is still showing slight bullishness. The trend is still intact. But like I said, we're pretty much at resistance. We just need that one more big push, take out all the stops, probably touch resistance, maybe get to like 402, something like that. Another day or two of big push. And then you would expect we get sideways choppy action, kind of like we did here in December. Sideways chop, one more big push to take out all the stops, and then you get that acceleration to the downside. At this point, you have to expect that we might come back down, retest the 380 level, still looking for that bigger move down. Could certainly come back down and retest the 357 level. This has been a little bit stronger than I would have expected on the retrace, and potentially that this is a more solid bottom. Either way, though, expecting this to come up, take all the stops in the short term, come back down and retest, and then we'll see what happens at this level. Could certainly double bottom, and maybe we get a push higher from there, and we break that resistance and start a new trend to the upside. Certainly a possible scenario, but right now, in the very short term, the trend is still bullish, has not shown any kind of bearish divergence on the 4-hour or the daily chart. Moving over to the NASDAQ on the hour and the 4-hour, not quite the same story. I don't think we're going to fill the gaps. That would be a big push. Would need to get up to like 386. So that'd be about another $7. I guess it could happen. You know, anything's possible in the markets. That would be a really strong push for the Qs. At this point, I think we're just going to test these lows here, probably at 282, maybe 283. Another $2-3 of upside. Test these lows as a significant point of resistance before we get that bigger push to the downside. And at least come back down and test this as a longer term point of support at 263 or so. It's worth noting that we have no momentum here on the hourly chart. Trend is still intact. We continue to come down and test the 9 and the 21 on the hourly chart, and both times held up, and we continue to make higher highs. Even in the after hours here, we finished at 279, which was basically the close of day. So we're not selling off after hours, again, indicating that the trend is intact. Do have slight divergence here on the hourly chart, which is interesting. Got some really overbought conditions early in the session. retested those highs, but we did not get into that same level for RSI. So that's interesting. Potentially bearish divergence on the hour on the hourly chart. But like I said, I think we need to make one more solid push higher, and that'll definitely take the NASDAQ with it to get into that next level of resistance, take out all the stops, and then start to push lower. You can see I already had a level drawn here at 283.50, and potentially that's all that we need to be looking for here on the NASDAQ. Moving over to the Russell on the 4-hour and the daily chart, basically going parabolic, definitely the strongest of the major indices right now. You can see this huge bullish momentum that we have. Looks like we're going to take out the highs at some point, get up to that 188 level to take out those stops. A solid higher low here, kind of like the S&Ps, but it has been much, much stronger here recently. And that's definitely something to be paying attention to. I've seen a couple of YouTube videos saying that the Russell is breaking out and that the bear market might be tapering here. I'm not quite there yet. I think we might touch these highs, maybe double top and get some sideways price action. But if we are going to take out this high, it has to be pretty aggressive. We've already had a really strong move. And if it's going to keep pushing, it's going to be a little bit ridiculous, get pretty overextended. And that's some pretty tough markets to trade. So keep an eye on this. The Russell does look very strong. But at this point, you have to assume that you're going to take out the highs and probably get rejected. Moving over to Tesla and Apple, I just want to highlight some of the differences here. So you can see Tesla is moving sideways now within a range, basically between 123 and 106. Going sideways, can't seem to get above that level. Potentially might get pushed above it here in the short term, but definitely does not look as strong. Apple continues to make higher highs and higher lows here. And it's almost building a little bit of a counter trend rally here. Might get up to 138 to test that 144 on the 4-hour chart. If we do get that kind of a push, that would be really good. Definitely would move markets higher. And that correlates with the rest of what I think is going to happen in the major indices. Get into that zone, get that rejection, maybe come down, double bottom here. And potentially that gives us a little bit of a longer term bottom at 125, 125.50, somewhere in that zone. Moving over to IYT, looks very similar to the Russell here. Continues to make higher highs. Very, very strong looking, big bullish momentum. Not in overbought conditions quite yet, but it has been very strong. You can see lots of bullish candles here on the daily chart. Looks like we're going to take out the highs, come up to around 235, take out all the stops, and then we get that rejection to the downside. At this point, though, there's certainly potential if you look at the 4-hour chart that we take out the highs, come back down, retest support at this level down at 224, and then we get a push back to the upside, which is another potential indicator similar to the Russell. Maybe we touch those highs, come back, retest support, and get the continuation. Definitely something to watch for. I don't know how that'll correlate to the S&Ps and the NASDAQ, which is pretty heavily weighted into tech. Obviously, transportation is more correlated with the real economy, which is part of why I talk about it. But it is good to see that this is quite strong. This usually correlates most closely with the Dow, and it is showing strength for sure. Moving over to gold, it's basically been going bananas. It's rallied really aggressively from 151 up to 176.50. Huge push here, continues to get into overbought conditions multiple times. Has not gotten below the 50 at any point, showing that this trend is still very strong. Pretty overbought here in the short term, though. Got overbought conditions once again on the daily chart. Pretty strongly off of the EMAs on the daily. You would expect this to come back down and retest at least the 9, if not coming back to test the 21, down at maybe 170, 171, so about 5-6 points of downside potential. We do have some support levels here at 171, so if we come back down, retest that level, get the continuation, you can see we kind of already did that here on the 4-hour, got up above it, gap down, tested it, continued higher, filled all those gaps and moved higher. But yeah, everything looks extremely bullish on gold, and it looks to be a solid trade. Hard to trade this when you get really overextended, though. Certainly would wait for some kind of pullback for an entry, and then you would expect this to continue based on what we've seen here recently. Moving over to stocks above their 20-day moving average, as well as the 50-day on the left and right, respectively. You can see on the 20-day, we are there. We're overbought. We're in that same level where we see rejection multiple times here. We've come into this area, and we pushed lower. Doesn't mean we're going to reject immediately. It could certainly go sideways like we saw here through October and November. Many, many days in a row, we were going sideways in this zone. That could certainly happen again, but we are in that zone, and usually that means most of the up move has happened, and we do need to be cautious here going much longer, and that the risk is certainly now to the downside. Similarly, here on the 50-day moving average, getting pretty close to that zone, not all the way there yet. Has another couple points to get to that 85 level, which seems to be the point where we start to get rejection. It is worth pointing out here that momentum on both of these has not slowed down. You would certainly expect that to happen now on the 20 going forward, similar to what we saw here in October going into that November timeframe where we saw momentum start to fade. It started to give us that indicator that we were going to start accelerating to the downside. Looking at the NASDAQ versus the Dow and the S&P 500, you can see the NASDAQ has been losing really dramatically over the last year. Recent point here, you can see we started to gap up, kind of have an island reversal here on the Dow, similarly on the SPY. Island type reversal, gapped down into that zone, gapped out of it, just like we did on the Dow. And this looks strong here, at least in the short term. Definitely would expect this to come up and test the 55 in both cases. If we see a break of the 55 and we start to push higher, could be an indicator that this is a little bit stronger in terms of a reversal. Otherwise, looking at momentum on the daily charts, continues to build, looks quite strong. Definitely not in an area where you would expect it to slow down quite yet. In both cases here, yeah, it looks quite good. It's definitely worth noting here we have a little bit of divergence, lower price action, but higher levels on the EMAs, potentially showing that this is going to bounce a little bit higher here and maybe get up to this 3490 level on the NASDAQ versus the Dow. If we get back into that same level, 295 here on the NASDAQ versus SPY. Looking at the put-call ratio here on the daily chart, it's worth noting that we are definitely in that lower half, showing that there's a little bit of complacency here. We do see a little bit of fade to the upside. Obviously, it doesn't work quite the same way on this chart. It's very choppy, no major trends here. But you can see we've been slowly edging higher all the way since February of 21. And the last time that we were kind of in this zone for a while, you can see right here at the highs in August where we were stuck in this lower section. No big pushes to the upside. Seems to be what we're getting the start of right here, where we go a little bit sideways, staying in this lower quadrant. And then once we see that bigger push to the upside, just like we did here, you see some big spikes moving higher. That's going to be a pretty good indicator that we're going to start moving lower. Moving over to the DXY on the 4-hour and the daily chart, you can see here we pushed down throughout the session, sold off really strong, as you would expect. Inflation is starting to cool off, therefore we expect the Fed to start slowing down, and therefore the dollar is not going to be as strong of an investment, and it's selling off. So you broke out to the downside, broke all the lows. Momentum on the daily is starting to tick down once again. I think this is part of the reason that markets and equities are moving higher. The dollar is just really weak, and those dollars need to go somewhere, and equities is definitely one of those places. Sold off almost 1% here today on the dollar, so pretty big move. You can see what that looked like on the 4-hour. It's been a really aggressive move. Either way, came up and tested the 105.50 level, got that big rejection, and we've moved down really aggressively from there. Not much to say here. Momentum is really strong to the downside. You expect it to go lower. It looks like we have one really strong push, and maybe we're starting to get the second really strong push on the longer time frames. Of course, we've talked about this before. We came into the exact zone that we talked about yesterday. And there's certainly potential you get a bounce off of support at this point. This trend line that we've been watching on the 4-hour for quite a while has been a major point of support and resistance. We're definitely in that zone. We're definitely pretty extended. You can see really big overextension on the 4-hour. Can certainly get a short-term bounce, maybe back up, test those lows at 103. It'd be a fairly big push from where we are. But if we do and we get rejection, then look out below because the dollar is going to be moving lower. And that should be good for equities in the short term at least. Moving over to JNK, you can see really, really strong. Continues to push higher. Did take out the highs at one point here today. Momentum is very strong. Could certainly go a little bit higher here. But you have to start looking for that reversal. If we do break the highs and continue higher, that should be good for growth and for the NASDAQ. This is generally a leading indicator that I look to for growth, and it's correlating really closely with the Russell right now. So the Russell is looking like it's going to take out highs, just like JNK is doing right now. And that's partly why I'm a little bit bullish on the NASDAQ even after this report. And how extended we are going into the end of the week. Moving over to TLT, as you'd expect, it went much higher. Slowing inflation means slowing Fed, and slowing Fed means strength for bonds, and specifically government bonds. At this point, you expect it to take out the highs and get at least into overbought conditions, which means you have at least a couple days of more price action. You could look for a double top, but I would expect it to take out the highs at this point. Solid bottom. Looks like we're going higher. Talked about this before multiple times, but looking to fill this gap back at 115. Probably a good price target for this push. And yeah, everything is strong on TLT. Keep it in your watch list. As long as this continues to go higher, markets should be in better shape. Finishing up with the VIX here, you can see we sold off throughout the session really aggressively all the way down to 1883. That's a little bit lower than I thought. Get into the 20s. Thought we might find some support there. We took out the lows here from the August high at this point, which is definitely a little concerning. This is the kind of zone that you would come into and expect some kind of reversal. At least that's what we've seen here recently. Let's jump up to the 1 week view on the VIX just to give some perspective. Yeah, we haven't been this low in quite a while, going back to March of 22. Last time we were in this zone was December of 21, which is basically the all-time highs, which is certainly a little concerning. At some point, this is going to bottom. We don't know quite where that is, but you have to be a little bit concerned at this point and understand that some of the upside potential, if not most of the upside potential, has come out of the markets at this point. Moving over to my accounts, you can see I made a little bit of money today. Not a lot, but not bad either. Definitely looks okay. Worth noting that I do have one covered call here from 100 shares at 279.20. Sold the 279 call for just under $2, so expecting to get about $170 profit there on my IRA. You can see I'm pretty conservative with that. We are at 279 right now. And like I said, I think most of the upside has already happened. So I am being a little bit cautious, and I think we might get 1 or 2 days of upside, and that'll be it before we get at least a retracement in the short term, if not a bigger push down. And then on my taxable account, you can see I have two 277.50 puts that I sold for $1.29 each in a small profit right now. And then I have two 279 puts for today that are probably going to get assigned. The market has been jumping around this 279 level, and it looks like after hours we're a little bit below that, so probably going to get assigned here, which is fine. I'll take those 200 shares and probably sell them early in the session. If it looks strong, I might sell a call against them and try to milk it for a little bit more profit. Like I said, the trend is still intact, even if it is slowing, and I do expect at least one more strong push up to take out the stops before we move lower. Also worth noting, I did sell one call here at 283. This is a naked call. I do expect that we are going to move lower next week, and I'm starting to build that position out here at 283. That's in a small profit as well. Let me know down in the comment section what you think the market is going to do. Are we going to get that final push, or is the push done? Are we going to take out the lows, or are we going to make a higher low and continue higher? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.